There's not a lot of issues at the moment that are really kind of weighing on the markets. If we take a look at, kind of the overall sentiment, yes, I know there's a lot of people very concerned about, hey, we're still supposed to have a recession, we're supposed to have these other things. This is what's happening with the yen, this is happening with geopolitical events, etc. And this is all going to mean that the markets are going to crash. This doesn't really work that way. Paying attention to the markets here in the near term, the bias is to the upside at the moment. But here's what you need to know before the bell this morning. We are right at that 50-day moving average. So this is critical resistance here. The market's kind of at a make or break juncture at this 50-day moving average. If we can break above this moving average today and close above it and hold above it here this week, we're going to try to retest these previous highs of the market. So again, upside is around to 5,200 right now for the markets. And again, as we kind of wrapping up earnings season, we have about 80% of the S&P now behind us in terms of reporting earnings. Earnings beats were kind of not great. We had a very low beat rate actually in terms of overall earnings, but the majority of earnings growth came from the big mega cap companies. For everybody else, really not a lot of earnings growth. We saw a lot of misses, a lot of stocks down, 15, 20%. Earnings misses were brutally punished in this market this year. Rewards were not that great if you actually beat earnings for some companies. So anyway, we're right here at the 50-day moving average. We're now back on a MACD buy signal as well. So we now have this kind of support for the market. You've got a MACD buy signal. We're not overbought yet. So again, the kind of the pressure at the moment is to the upside here. And again, with the Fed becoming a little bit more dovish for the markets, that's been giving the bulls a little bit of support here. We have a lot of economic data out this week also, so we'll see how that data kind of supports this move in the market. But for right now, depending on how we finish the day, the bias is to the upside at the moment. If we can close above this 50-day. Now, right now, futures are currently pointing higher. We're up about 136 points on the Dow. At the open, implied open on the S&P right now is 1796, so up about 18 points. Certainly looking to break above this 50-day moving average today. And again, that'll kind of break that overhead resistance that provided that first failure. So back about last week, we tried to get to the 50-day moving average, and that failed. And right at the 50-day moving average, tested the 100. So that was the first kind of test at resistance. We're now doing the second test here. And again, this is why this is kind of make or break. The market can break above that level. We're going to get a move higher. So at least in the short term. Outside of that, again, there's not a lot of issues at the moment that are really kind of weighing on the markets. If we take a look at, kind of the overall sentiment, yes, I know there's a lot of people very concerned about, hey, we're going to have, we're still supposed to have a recession, we're supposed to have these other things. This is what's happening with the yen, this is happening with geopolitical events, etc. And this is all going to mean that the markets are going to crash. This doesn't really work that way. But again, paying to the markets attention to the markets here in the near term, the bias is to the upside at the moment. And again, just continue to kind of trade that way until the market gives you a reason. And what reason would that be? Well, if we break below this 100-day moving average, now we got something to talk about, probably a bigger decline. Also, we just had a fairly weak April. May tends to not be a hugely positive month, but tends to be a little bit lackluster. But June, July, and August, as we've said before, tend to be fairly strong months in presidential election years. We're still set up for another correction here. We get a rally. We have another correction coming potentially in September, October, right before the election. So again, just because the bulls kind of have the narrative at the moment doesn't mean they're going to keep it that way for the rest of this year. We've got another potential correction ahead of what's going to be potentially a fairly contentious election. So that's what you need to know before the bell this morning.